Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Simon Moon and Fraser Mackersie from Unicorn Asset Management to talk about the Unicorn AIM VCT. Simon, Fraser, welcome. So we're here to talk about the Unicorn AIM VCT. Simon, perhaps start us off. What is it?
Well, it's an AIM-based VCT. It's the largest in the market. Been established for, about 20 years. It's a mature VCT, which means it has the characteristics of I'd say a mature investment trust, but with the tax benefits as well, and the opportunity to invest in much younger companies that are prone to high levels of growth.
And Unicorn Asset Management, for those who aren't familiar, who are Unicorn? And what's your role there?
Unicorn is a small and mid-cap UK equity specialist. We've been established for about 25 years. We think that to benefit from investing in the UK at this end of the market cap scale, you've got to be specialists, which is what we are. And I've been there since 2008. And before that, I was an analyst at a stockbroker and have been a fund manager across a number of the funds at Unicorn since then, essentially.
Fraser? And your role at Unicorn?
Yeah, I'm also a portfolio manager at Unicorn. I also joined in 2008, and I have responsibility across a wide range of funds at Unicorn, all focusing on the small and mid-cap space, and obviously the VCT fits into that as well with its AIM exposure.
And I guess through that history at Unicorn, you've seen the AIM market go through many peaks and troughs. We're currently, I'd say it's fair to say we're in a trough right now. How does the AIM market look to you at the moment? How's it faring? We must be near the bottom, or at least at the bottom, Simon.
I think that's a pretty fair assessment, although it's felt like that for some time. I think this has been one of the most protracted relative or periods of relative underperformance for AIM, best part of 5 years, essentially, when you look at it versus large caps, and the level of drawdown has been extensive. And I think the fact that it's happened over such a long period of time, it's almost normalized it, which means that people aren't sort of scrabbling around looking for the value anymore, when really they should be.
And Fraser, what sort of companies is the VCT looking to back?
Yeah, in a wide variety. We have around 100 individual investments operating in a wide range of different sectors at different stages of their maturity as well. So some of the portfolio holdings that have been in there since the start of the fund are quite mature, quite large, and what you'd expect to see in a kind of normal smaller companies trust. Some of the earlier investments or the more recent investments are much earlier stage in their life cycle and at a kind of a higher growth stage. So you get a real variety in terms of the maturity of an individual company and also the sector exposure, which we think is one of the big attractions of the Unicorn AIM VCT.
Yeah. And so when you're looking to deploy new capital, are you looking for those new IPOs, or are you looking to go to some of your portfolio companies and try and convince them to take more of your capital? Which are you doing?
It's normally the other way around, them convincing us that they need more of our capital. But yeah, we do have a wide range of kind of opportunities to invest. The IPO market is clearly a good place when that's open and active. It hasn't been for the past couple of years, although we're starting to see tentative signs that is improving. Clearly, there are capital requirements from existing holdings as well as they continue to mature and grow, and that's always a place for us to deploy capital in any given year. And then there's also investments that we maybe haven't gone for initially that have continued to grow and develop on AIM that we will look at again as they continue to progress. So starting out in any given year when we look to raise money, we always have quite a good view on where we can deploy that in the following 12 and 18 months.
Good. And Simon, we've seen some rule changes recently to VCTs, doubling the amount of capital effectively that can be put into some of these companies. Is that going to change AIM much?
It should do, I'd say. I mean, it will encourage, you would logically anticipate it encouraging more companies to list on AIM, because the window for their VCT qualifying status is longer and greater, and allows companies that are perhaps grown more slowly to enjoy VCT status. And that should enable either companies coming onto the market, IPOing, or companies that are already on the market, sort of accessing more VCT qualifying capital. which is obviously a benefit to them, a benefit to VCTs in general, and should be a benefit to AIM as well.
And do you find that there are companies that you've backed in the past that hit those limits and you can no longer follow on?
Exactly, yeah, and that's always been a frustration with a part of our job. It's been a frustrating part of our job, as you've seen companies hit a certain level of maturity and maybe require a bit more funding to really maximise the potential they have, and being unable to receive that funding in a VCT qualifying way. That should enable companies and examples like those to access more funding for longer, which should really help bridge that funding gap. Sort of otherwise there's a bit of a cliff edge for some of these companies.
Sure. So it should be pretty helpful.
I would hope so, yeah, and I really, really would anticipate it will be.
And so turning to some of those more recent investments in the portfolio, do you have any good examples, Fraser?
Yeah. I mean, quite unusually for us, we did a private investment recently in a company called Orca Computing, which is, we think, in a very interesting phase in quantum computing. There's a lot of talk about this. We think with Orca, we found a business that is IP rich, and crucially for us has a very clear commercial strategy as well. So it's not all theoretical work. We think there is actually a really good opportunity commercially there to capture quantum computing power. So it's quite rare for us to do a private deal. We are an AIM VCT, and that continues to be our primary focus. But from time to time, opportunities emerge like Orca that we're obviously going to try and back and benefit from.
So what's Orca doing?
It's
basically quantum computing way beyond me. I probably won't understand a word you say from here on out, but I suppose there are various different parts of the quantum computing realm. Is there a particular focus for the business?
Yeah, I mean, they are making, we think, quantum computing affordable, and it should open up quantum computing to a lot more people than are currently able to access it. At the moment, quantum computers are hugely expensive, very hard to implement and integrate. We think that the commercial angle that I talk about is Orca being able to access and allowing customers to access it in a more sensible, practical, lower cost way, which we think is very powerful.
So these are machines that can go into server rooms that don't need a dedicated room for them, that's climate controlled. They're quite robust compared to most quantum computing systems, which often need to be frozen to almost absolute zero and have a number of scientists and engineers on site.
Look after those qubits.
You've got to look after those qubits. And I think that's partly down to the sort of the way in which they manage the qubits, which is through sort of photon manipulation, which is in many sorts of existing sort of telephony systems, very modern telephony systems. So they can commercialize this at $1 million per machine rather than $30 million per machine, which you get from the other ones, with a much more commercial focus on integrating those into data centers, etc., to dramatically increase the efficiency of those.
So how do you find a business like that?
That's through our network at Unicorn. The fact we're a very long-established VCT means we get plenty of inbound inquiries. But that one was genuine network of a Unicorn employee knowing someone that was requiring VCT qualifying funding and a part of that company. So it's just
And you've had, I guess we'll probably come on to the very successful private exit later. Do you think you'll do more private deals? Is this a trend?
I think we're an AIM VCT, and we know what we are, and we've always had the freedom to either continue to back companies once they might want to leave AIM and go private, or invest in private companies as long as they've got a clear view and part of their strategy to eventually IPO on AIM, and that's the case with Orca. We'll see what happens with that one. But yeah, I think so. I think with any private investment we make, we have to if it's private at the outset, we have to make a clear distinction of the path to listing, the path to commercialization and the crystallization of our value. So that's a really important part of it. But I think we're very well resourced at Unicorn, and that does give us the optionality to look at private investments as well.
Well, that's very interesting. Do you have any more examples of companies, maybe an AIM company you've backed recently?
Yeah, sure. Another quantum for you, but it's not quantum computing. It's quantum base. So they've developed a fascinating technology that enables them to add a patented ink to a standard printing process that is then registered in a database, the pattern of that ink and the way it comes out, we can't see it with the naked eye, but it's registered in a database, which basically proves the uniqueness of that tag. So it's used for making sure the duty has been paid on cigarettes and alcohol in certain countries, or that an article of clothing is the genuine article. Or even art. They're working with sort of suppliers of an art database of making sure that the provenance of the art is proven, and they're working with Delarue as well, which is a banknote printer, but they're working with the ID verification for them too. It really is absolutely fascinating technology spun out of a university, and just when you think about it, it's remarkably straightforward, but you need a lot of know-how about it, and the revenue streams that they can get, and producing millions of these, even if they cost pennies to produce, is really, really compelling and obviously very long term.
So turning to maybe some of the more established names within the portfolio, one of the largest has just been sold, but maybe some that are still in the portfolio. Any good examples there?
Yeah, sure. We've got Tristel, or Tristel, depending on how you pronounce it, which is a manufacturer of its own formula of disinfectant. That's growing very well in the United States. It's been in the fund for over 15 years, I think.
Yeah. It's an AIM staple, that company.
Yeah, it really is. It's a really high quality business, great quality of earnings, and they are a disruptor in a pretty sleepy market. But their disinfectant is incredibly high performing, not super corrosive like a lot of the other high performing ones, and they've got this new sort of new focus on ultrasonic probes, which require a lot of cleaning. They can do it very quickly, so they don't take them out of service in a very busy area of the hospital. So they don't create, they remove bottlenecks essentially. So they're a real solutions provider, an excellent company.
Oh, good. And so one of your gems within the portfolio was recently taken out by private equity. Mm-hmm. Good result for shareholders. Are you happy with the exit, or?
We're happy with it in that it's crystallized a lot of value for shareholders, and we were also able to retain a meaningful position in Hasgrove. This is a corporate intranet provider that has developed a great product offering, and obviously a superb annual recurring revenue stream as well because of that profit offering. So it's a little bittersweet to see it go, because we think it has it's on a tremendous pathway. However, the fact that we're able to retain a meaningful position in that is excellent for us and for shareholders.
It was quite a sizable uplift to your holding value at exit.
Yeah, it really was. Yeah, so that helps soften the blow. So we were happy to crystallise that. It's been a great result for Unicorn VCT shareholders.
And maybe one of the most profitable VCT exits, potentially at 60 times ish.
Yeah, 67 times I think.
It's not a bad result.
It's not. Yeah, not to be sniffed at.
So obviously, for every good outcome, we must also talk about the risks within the VCT. So being AIM market investors, you're more than aware of the risks.
Yes.
How would you describe the risks today to investors?
I mean, they're as they've always been. Though the new rules will probably help a bit. However, you always, when you're investing in young companies that are pre-profit, you are always risking the speculation on whether they turn to profit on their supposed timeline or not. And if they don't, then we have to make the decision to whether to continue to back them and whether we now trust and have faith in the new timeline. So there is a risk to it, and it's pleasing to say that we get it right more times than enough to outweigh the times we get it wrong, and the performance on the fund has been pretty strong.
And I think that's one of the beauties of the Unicorn AIM VCT is, as I mentioned earlier, you have this kind of wide breadth of companies at different levels of maturity. So, the earlier stage newer investments are risky. They always take longer than they expect to commercialize. They always require more money. We've been doing this a long time. We understand that process. But I think investors in the VCT also get exposure to companies like Tristel and Hasgrove and quite mature businesses as well. So I think that's the real attraction of Unicorn AIM VCT.
You've had some some very large successes now on the private side. You're not tempted to maybe come up with some sort of hybrid strategy, perhaps?
No, you know, we're big supporters of AIM. Yeah, we see every day the good that AIM does and the support it provides to early stage companies. It plays a really important part in the kind of funding ecosystem for companies of a certain size, and we're very much committed to that.
And the structure of the AIM VCT, the Unicorn AIM VCT, does allow us to invest some of our assets into private companies too. So we don't need to just ignore them entirely. We can select what we hope will be the best ones, but they will, in a number of holdings terms, will always be the minority.
Sure. So summing up everything we've discussed then, for those who want to back a VCT this year, why should they back the Unicorn AIM VCT?
I think track record is a pretty strong argument on that one. It does have a good track record. The recent crystallization of value in Hasgrove, shows that there is significant external buying appetite for these high quality smaller companies, AIM companies, and private companies. So I think, despite the well-documented risks and concerns that people perceive around AIM, I think that should allay some of those concerns.
Fraser, anything to add?
Yeah, look, I think AIM's had a tough few years, but we think there are some brilliant companies that are undervalued, many of which sit in the portfolio. And again, I go back to this point of different levels of maturity within the fund. Investing in this portfolio now, you do get some brilliant, mature, large businesses and some really exciting earlier stage companies that we've also touched on. So it's a really good mix we think that you get in the current portfolio.
Fraser, Simon, thank you very much.
Thank you.
Thank you.
If you're watching on YouTube, please press like and subscribe to the channel for more.